Are there any benefits of doing Roth conversions as early as you're able to, like early in retirement? Well, we're going to talk about that next. Hey, this is Tommy Neesmith. I'm a financial planner at Christy Capital Management, where we're helping federal employees prepare for retirement. Today we're talking about the benefits of doing Roth conversions as early as you can. Now let's first define what a Roth conversion is. That is where you have traditional IRA money and you go ahead and move it to a Roth IRA and pay the tax that's owed so that once it gets to the Roth account, it can now grow tax-free. Now notice I'm saying traditional IRA to Roth IRA because inside of the TSP, they don't allow you to do this. You can't do a Roth conversion inside the TSP. So the first benefit of an early conversion is the Trump tax cuts will sunset in 2026. Most all the experts believe that in 2026, tax rates are going to go up back to the way they used to be, which would be worse. So that gives you the years up until 2026 to take advantage of these exceptional, better rates. If you can do some Roth conversions during this time frame, it's expected to be at more advantageous rates than waiting. So in that case, the sooner, the better. The next benefit is flexibility that you gain once you have money in Roth. You get to pay the tax when you want to, in the amount you want to, being able to control the timing and the amount of the distribution, which in this case, a conversion acts like a distribution because it's taxable. You get to control the amount that you do and the amount of tax that you pay. If you don't do a conversion and you leave everything traditional, you will eventually hit the required minimum distribution age and you will be forced to take the money out. You don't get to control the timing and you don't get to control the amounts. By controlling the timing and the amounts, you have some control on the tax rate you pay. When you hit the line going up to the next tax bracket, you can choose to stop. When you have an RMD and the IRS forces you to take money out, you don't get to stop. RMDs can push you into the next tax bracket, and you can't really do anything about it. The next benefit has to do with the tax-free growth and how it deals with estate planning. The sooner you do a Roth conversion in theory, the more time the money will be in a tax-free account. So under the assumption that it's growing, there's more time for tax-free growth. Generally speaking, I'm of the opinion that the Roth account should be part of your aggressive money. Let's say you want a portion of your money to be conservative and a portion to be aggressive. I believe, in my professional opinion, that since Roth account is all your money with no taxes involved, it would get my vote to let that money be a part of your aggressive allocation in hopes that over time, it would grow more and that more would be tax-free. If you think about what will happen to your money after your death, getting it to a Roth allows it to grow even farther tax-free. If your spouse inherits your Roth IRA, they can roll it into their personal Roth IRA and not have required minimum distributions. It can stay in a tax-free account their entire lifetime. If the account gets left to someone that is not your spouse, they have a 10-year window to take minimum amounts out and then have to have the full account emptied by the end of the 10th year. But still, these distributions are tax-free. So the benefit of doing it earlier is it allows you to have more time, whether it's in your lifetime, your spouse's lifetime, or even your beneficiary that's not a spouse. It gives more time to be in a tax-free status. More time, tax-free, is better. Another benefit of Roth is that there are no required minimum distributions where you're forced to take out a minimum amount. Roth IRAs under current law don't have them. The sooner you start Roth conversions, the more time you have to try to convert all of your money. Depending on your situation and your individual planning, it may make sense to try to convert everything, and it may make sense to not Roth convert everything. But for some people, they don't want required minimum distributions. That means they will need to convert all of their traditional IRA money. When you have a traditional balances of $800,000 or more, it can take quite a while to get all the conversions done. Remember, to play the tax bracket game, You have to move over precise amounts each year, maxing out predetermined tax brackets. This takes time. So the sooner you start, the more likely you'll be able to make the headway that you need to make so that you show up at RMD age with no RMDs. So how early can you start Roth conversions? If you have a traditional IRA, you can Roth convert at any time. Keep in mind that if you're under the age of 59 and a half, you will have to pay taxes from other sources. You can't take money from the conversion to pay taxes because that would be deemed early distribution and be subject to a penalty. If your money is in the TSP, how early can you convert that? If you are 59 and a half and over and still working, you can move your TSP out into an IRA and then begin doing some conversions. You have to get it outside of the TSP because the TSP won't let you do it. If you retire earlier than 59 and a half, you can move money out and start doing conversions. For some people, they can retire at 56 or 57 at their MRA. If you're special provisions, you can retire as early as 50 or sometimes even earlier than that. At separation, you can move your TSP to an IRA. Now, if you do Roth conversions and you're under the age of 59 and a half, keep in mind, again, you need to pay taxes from another source. We have developed strategies of helping clients do that. So if it's something you need help with, reach out to us. If you want to do Roth conversions, but you don't want to make mistakes, check out this video right here. 6 Roth IRA conversion mistakes. If you need individualized help, go to christycapital.com and click on Talk to an Advisor. We'd love to talk over your situation. So if you're getting close to retirement, or if you're 59 and a half or over, give us a call so we can talk over your situation.